Welcome back to Roxham TV. I'm your host, Jamie. I hope everyone is having a great day so far. We've got a packed show today because the market is moving in. Bitcoin is back above $81,000. Global tensions are rising and crypto industry is evolving way beyond just price charts. So there is a lot we need to break down today. Of course, Bitcoin is surging again, as I mentioned, above $81,000. And right now, the market is completely split. Some traders believe this is the beginning of the next major supply shock. Well, the simple reason is because corporations are buying record amounts of BTC. ETFs continue absorbing those supply, and companies like MicroStrategy keep accumulating very aggressively. But the other side, on-chain firms like CryptoQuant are warning that this rally may actually be driven mostly by just leverage and speculation. So later in the show, we are doing a deep dive into both the bull case and the bear case for Bitcoin. Not just hype, but actual data, actual positioning, and what traders should really watch out here. Next, we also be covering a massive Tether update. Tether just reported over $1 billion in profit in a single quarter, and its reserves are now larger than many countries. The company now holds around $141 billion in US treasuries, which means one crypto company is now becoming one of the largest buyers of the US government debt in the world. And that tells you how important stablecoins are becoming globally. Then we move into global trade wars. The US is now raising tariffs again. This time it's on European cars to 25%. And Europe is already threatening retaliation. So, yes, trade tensions are heating up yet again. German automakers like BMW, Mercedes, Volkswagen could be hit hard. And we'll talk about why the US suddenly seems willingly to fight almost every major trading partner at the same time. Also, we shift gears to AI because AI is changing the entire tech industry. Coinbase is now laying off around 700 employees. But this is not really about financial distress. It's more about restructuring for the AI era. The company is now building smaller AI native teams, flattening management layers, and experimenting with autonomous AI agents inside workflows. So, this is not just Coinbase. We are seeing the same pattern across different companies like Meta, like Amazon, like Microsoft, and Salesforce. So later, we'll talk about what AI is actually doing to jobs, productivity, and corporate structure right now. We also have a big story about global crypto adoption. Kraken is now partnering with MoneyGram to let users convert crypto into physical cash across more than 100 countries. So no bank account needed at all. This is one of the clearest example yet of crypto connecting directly into the real-world financial system, especially in countries where banking access might be limited. Then we look at what's really happening inside crypto market. There is this new report just exposed something very fascinating about trade.xyz on Hyperliquid. Tens of thousands of wallets were farming activity for future rewards, but almost none of them contributed real trading volume. The actual liquidity was coming from professional firms, bots, and institutional traders. So we break down what that tells us about the current state of the entire crypto market structure. And finally, there's a very different Bitcoin story we need to cover. There's a school in Scotland that's now funding scholarships using Bitcoin donations. So not ETFs, not speculation, but actual education. The school is also building a Bitcoin treasury as part of a long-term financial strategy. And honestly, this might be one of the most interesting examples yet of Bitcoin slowly moving into real-world institutions. So in other words speaking, today's show really comes down to one big question. Are we watching the beginning of the next phase of adoption, or are markets getting ahead of reality again? Of course, we'll connect all the dots for you guys in today's show. So without further ado, there is so much to uncover today, so let's get straight into the first story. We're starting with the whole geopolitical or macro story, a little bit of both. This time, let's focus on the US or Donald Trump, what he just announced. So the US right now is raising tariffs on European cars and trucks to 25%. And Europe is already threatening retaliation. So, yes, there is another trade war and might be starting right now. So, what just happened is that Donald Trump announced the new tariffs in Truth Social post. He accused the EU of not following last year's trade agreement with the US. Right now, the tariff rate is about 15%, but under this new plan, it jumps to 25%. And of course, that is a major increase. So the European Commission immediately rejected Trump's claim. They say Europe has been following the agreement. At the same time, Brussels is now preparing possible countermeasures while also trying to reopen negotiations with Washington. So right now, basically, like both sides are talking really tough. So the question we have to ask right here, like who gets hit the hardest? Well, I would say, of course, it's Germany. Like this is a huge problem for German automakers. We are talking about BMW, Mercedes, Volkswagen. Analysts estimate the new tariffs could cost Germany around 15 billion euro every single year because the US is one of the biggest export markets. So this does matter. Like cars are one of Europe's strongest industry, especially for Germany. And tariffs like this make those cars more expensive in America. Of course, that would hurt sales, that would hurt profits, and put pressure on an industry that is already struggling with EV competition, with weak European growth and rising China competition. And to be fair, I've been sharing my views on the whole EU situation for a bit here in Roxham TV. I think like none of the basically the policies from Europe is making sense and looks like it's about to collapse. And right now, it's just like kind of accelerate on that speed. So this is not only happening in isolation. The US already imposed secondary tariffs earlier this year, targeting countries accused of supplying Iran with weapons. At the same time, the legal tools behind tariffs are changing too. Earlier this year, the US Supreme Court limited the government's ability to use emergency powers for tariffs. So now the White House is relying more heavily on Section 232, which focuses on national security. Now, here's the bigger problem, bigger question we have to ask. Why is the US picking fights with some, like many trading partners all at the same time? Because this is not just about Europe. We have already seen pressure on China, on Iran, on Mexico, and other countries tied to manufacturing and supply chains. Well, it turns out the US is trying to rebuild domestic industry, so especially around area like manufacturing, like energy or strategic supply chains, and tariffs are being used as leverage. The message here is quite simple. Like if you want access to the US market, the terms are changing, and especially when it's under Donald Trump. So if you ask me, risk is definitely rising for investors because trade wars don't happen in a vacuum. If Europe retaliates, American exports could also get hit. And once tariffs start escalating, costs usually rise for everyone. So whether you own a business or you're a consumer or you are in the supply chain. Markets are watching this very closely because tariff can affect inflation, can affect the car prices, corporate earnings, and global trade flows, especially at a time when the world economy is already dealing with war risk, is already dealing with energy volatility and slowing growth. So a final take for this news, like last year we already knew that like US and EU trade deal was supposed to calm tensions, but right now the tensions are back on table. And if this escalates any further, this may become another major pressure point for the global economy. All right, so let's shift gears to the second story I need to cover and let our viewers know. is when it comes to Coinbase. I feel I'm responsible to talk more about Coinbase because like I've been doing analysis for quite a few years actually. So even back in 2023 as a stock that I'm very bullish. But right now they have news like this. So Coinbase is laying off around 700 employees, and that's about 14% of the company. And this is not because Coinbase is running out of money though. This is about preparing for the AI era. So what just happened is that the company sets the layoffs will happen during Q2, and the restructuring will cost around $50 to $60 million, mostly severance payments. So the CEO, Brian Armstrong, explained the move very directly. He said, "We are in a down market, no doubt, and need to adjust our cost structure now." So the goal right here for the layoff is to become leaner and faster and more efficient before the next growth cycle even begin. But this goes beyond like layoffs. It's not just about cutting jobs. Coinbase is also redesigning how the company works internally. Management layers are being reduced. The company wants a maximum of 5 layers of management. So that means less hierarchy, faster decision makings, and also smaller teams. And AI is right now part of the workflow. And here's the important part. Coinbase is shifting toward smaller AI team, AI native terms, including what they call one person pods, meaning one human working alongside anonymous AI agents. These AI systems can help with engineering, can help with coding, product workflows, and internal operations. So this is not just automation anymore. This is AI becoming part of the company structure itself. And interestingly speaking, right now we have the stock price of Coinbase pulled up here. Coinbase literally just announced this layoff, but the market liked the news. So Coinbase stock jumped up more than 6% on the day, trading around, well, it closed at like $200, but right now it's at $197. And that's a strong signal that the market see this as an efficiency, not weakness, because at the end of the day, Coinbase is still making a lot of money. And this is not alone, because like we talk about layoffs because of AI, how tech companies are preparing this trend and basically make the company leaner. It actually makes sense, right? Because we have seen this similar moves from maybe Meta or Amazon, Oracle, Salesforce, to cut jobs, to flatten teams, spend more on AI instead. And that seems to be the trend and formula right now. For years, tech companies focus on growth at all costs. So what they did in the past is that they want to hire more people, they want to build bigger teams and expand very aggressively. Now the focus has changed. Market wants profitability, efficiency, and higher output with fewer employees. And AI is becoming the tool to make that happen. And this is part of the bigger shift. Like this changes how companies think about labor. Because if AI can help one employee do the work of several people, then businesses simply do not need the same headcount anymore. That's the reality markets are pricing in right now. But notice something very important, like Coinbase is not slowing down whatsoever. They are still investing very heavily in stablecoins, in prediction markets, in of course crypto infrastructure. So this is not it's not retreat, it's repositioning. The company wants to survive the current market, the current cycle, and be ready for the next one. So the final take for Coinbase, it's just like the new tech playbook. We're going to see this trend continue. Tech companies trying to cut costs, deploy AI, scale faster with fewer people. And right now, Wall Street is rewarding companies that move towards that direction the fastest. But interesting speaking, there is a chart that I want to look at because like this is comparing Coinbase with other peers this year. So we have Coinbase, bullish being the exchange, and also S&P 500. As you can see, like Coinbase for in 2026, the performance is actually underperforming even for the S&P 500 and bullish. So like just looking at this chart, of course, it doesn't look like Coinbase is a really good stock. Might as well just get into S&P 500 and get some sleep at night, right? But like I would say this dynamic, just like take away S&P 500. If we focus on Coinbase versus bullish, like I would say the reason why Coinbase underperformed bullish is that the business cycle is simply just different. Because Coinbase is still very heavily dependent on US retail traders, while bullish has a bigger base on global institutional investors. And maybe that's the reason why it has been underperforming even compared to bullish. And when it comes to S&P 500, we cover that extensively on Roxim TV because right now, around 50% of the US GDP and of course the S&P 500 came from tech or AI. So AI stocks is the majority major reasons why S&P 500 is not going down. To be fair, we haven't really seen a stronger pullback, a stronger bear cycle for the US stocks market ever since 2008. The COVID one didn't really count because it was very short-lived and almost got a V recovery. So that's the story we comparing S&P 500 and Coinbase. These two stocks. Like when I say stocks, I mean like you can buy SPY. You get what I mean. This is the strategy I'm using right now. Like S&P is still very safe. It's a no-brainer because like it keeps changing and choose the most profitable companies to be in that index. So I'm still buying SPY, more like a DCA mentality. Coinbase, I still see strong growth from here. It is underperforming. Is basically all the facts is in front of in front of everyone, in front of the viewers. So we know, no doubt that Coinbase has been underperforming in 2026 this year. Looking at this time frame, but long term wise, I still have strong conviction because like Coinbase is still very tied to the crypto cycle. In crypto cycles, we go through like winter and summer. Of course, like when the bull market hits, Coinbase is going to generate a lot of fees from that trading activity. Right now, retails are kind of like, they're not here. So trading, in terms of the trading volume, it's not coming from retail. And of course, like this would hurt Coinbase business a little bit. The narrative right now is definitely stocks instead of crypto. Like this is one thing that Coinbase is trying to basically change the narratives as well. That's why they are getting into prediction market, stable coins, because like they have the strong partnership with USDC, and of course like half that revenue from USDC would go to Coinbase. And still like long term wise, my analysis for Coinbase, the stock still doesn't change. I got in quite early, actually. Not to brag here, but I'll talk about that back in 2023. So yeah, so 2023 it was like quite okay. Right now, I'm still long-term bullish, but again, like we have to wait using the long-term mentality. All right, so we'll take a short break from here. When we come back, we are diving into another crypto exchange. This time is Kraken because they just team up with MoneyGram and it does affect your daily life, especially if you're in the US. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. We are now diving into another crypto exchange, and this time Kraken is partnering with MoneyGram to let users turn crypto into physical cash. And this is launching across more than 100 countries. So this is not just another crypto feature. This is crypto connecting directly into the real-world cash system. So you might ask, how does it work? Well, here's the process. A user converts crypto into local currency inside Kraken. They then receive a reference code. And with that code, they can walk into a MoneyGram location and collect those cash. Sometimes within minutes, and of course, like no bank account involved. This is a really big deal because MoneyGram already has one of the biggest cash networks in the world, especially in places where banking access is limited, but cash pickup locations are everywhere. Now, Kraken is plugging directly into that infrastructure, which massively expands crypto off-ramp access globally. And this is where it gets very important. Like cross-border payments are still very expensive and slow, especially in developing countries. People sending money home often lose huge amounts to maybe transfer fees, to currency conversion and bank delays. This setup changes all of that. Now, value can move digitally through crypto and settle as local cash almost instantly. So if we zoom out and look at this news, zoom out for a bit, because like this is bigger than just trading. A lot of people still live in cash economies. If someone needs to pay rent, buy food, handle emergency, cash still matters. And right now, crypto alone cannot fully replace that. So this partnership creates a bridge between digital assets and also physical money. And over time, that bridge changes behavior because once people are comfortable moving between crypto and cash, they start having a choice, maybe whether to hold cash or hold digital assets. And those two systems behave very differently. Cash steadily loses their purchasing power over time because of inflation. Assets like Bitcoin are very volatile, but historically speaking, they have appreciated significantly over longer periods. So once access becomes easy, people start comparing the two. And this is not through hype, like not through everyone suddenly buying Bitcoin overnight, but step by step. First, we have access like MoneyGram, then usage, then eventually behavior would change over time, of course. For years, like crypto struggled with like one major issue, like how do we connect digital assets to our real economy? This partnership is one of the answer, is one really good answer if you ask me. Not replacing banks completely, but building alternative rails around them. So the final take, Kraken is not just building a crypto exchange anymore, it's building financial infrastructure, and partnerships like this shows like where the industry is heading next. Maybe like making crypto easier to use in everyday life, especially in places where the traditional system still doesn't work very properly. Well, so speaking of like these partnership and also like maybe what's happening in crypto, let's shift gears a little bit and look at the biggest stablecoin in the market right now. Of course, I'm talking about Tether, and they just reported more than $1 billion in net profit for the first quarter in 2026, and its extra reserves have now reached a record high of over $8.2 billion. That's a massive number for the company behind USDT. So let's show the report a little bit, because according to Tether's latest assertion report, the company made around like more than $1 billion in profit during Q1, and at the same time, is as excessive reserves, like meaning assets above liabilities, climbed to $8.2 billion. That's the highest level in the company's history. And here's something like many people still don't really realize. Tether actually hold around $141 billion worth of US Treasury bills. That makes it one of the top 20 holders of US government debt in the world. On a level, just to compare to some countries, like that is like how big USDT has become. And when it comes to USDT, a lot of people ask like, what back USDT? Tether said most of its reserve, if we take a look at this, the reserve is held in short-term US Treasuries and also highly liquid assets and cash-like instruments. But the company also reviewed more diversification inside its balance sheet. So that include around $20 billion in gold and roughly $7 billion worth of BTC. And this matter because Tether is no longer just a stablecoin company. It's becoming a giant financial institution because think about it, every time someone holds USDT, Tether would receive that dollar. And then what Tether would do is look at the reserve and the breakdown. Like they would deploy that dollars into asset like treasuries, Bitcoin, and gold. That creates a very powerful business model. And according to the CEO, the demand of USDT keeps rising. He said USDT supply surged by another $5 billion shortly after Q1 ended, meaning more users globally are still moving into dollar-backed stablecoins. Because in many countries, people actually trust digital dollars more than the local currency, especially in regions with very high inflation, banking instability, and capital controls. So USDT has basically become the digital dollar system for crypto markets and large parts of the world. Now, like, let me remind you again, because like if we take a look at the title here, how they put it on Tether website, Q1 2026 assertion report. So in other words speaking, this is not a full financial audit, meaning this is just a snapshot of reserves at a very specific point in time. That distinction still matters because critics have long pushed Tether for a full independent audit. So the bigger picture here, like regardless of the criticism, the scale here is undeniable. Tether is generating billions in profit while becoming one of the biggest buyers of the US government debt globally. That's a level of financial influence very few crypto companies have ever reached. So, in other words speaking, like stablecoins are not just a very niche crypto product anymore. They are becoming real financial infrastructure, maybe used for trading, payments, cross-border transfers, saving, and settlement. And right now, Tether is still dominating that market. So, final take. The crypto industry spent like years trying to build alternatives to the traditional financial system. However, ironically, like one of the biggest winners ended up becoming one of the largest holder of the USD and Treasury on the planet. So that tells you where the industry really is today. So Bitcoin may be decentralized for sure, but the dollar is still at the at the center of everywhere. Speaking of Bitcoin, it's a perfect transition for me to look at Bitcoin a little bit. Of course, like Bitcoin is ripping very high. Right now, as we are looking at it in real time, Bitcoin is sitting at 81.4 or 81.5K, around that level. Right now, however, the market is splitting into very different camps. On one side, like people were saying, this is the beginning of the next major supply shock. The other said this entire move is built on leverage, it's built on speculation. So today, let's slow down and really break down both sides because the answer matters a lot here. So let's take a look at the what the bulls are saying, like why they are so bullish right here. So let's start with the bull case. First, of course, corporate buying is really escalating very fast. Companies bought more than 50,000 BTC in Q1 alone. That's the biggest quarterly corporate accumulation ever recorded. This matters because every coin bought by corporations is supply removed from the market. And the biggest example, of course, the circle around MicroStrategy. So MSTR or Michael Saylor himself. So Michael Saylor says the company now control around 4% of the entire Bitcoin network. Of course, that is an insane number when you think about it. Like one company holding nearly 4% of all Bitcoin that will ever exist. And according to Michael Saylor, the Bitcoin gains this year alone are already above $5 billion. Now remember, like Bitcoin, it has a fixed supply, unlike the USD, unlike any fiat currencies in the world. Bitcoin will only be, so there will only be 21 million Bitcoins ever existed. So when ETFs, when corporations, long-term holders, institutions keep absorbing that supply, it leaves fewer coins available on exchanges. And that's the core of the supply shock thesis that Bitcoiners have talked about for years. And then we have also regulation. Like for years, institutions avoided crypto because the rules were unclear. Now that is changing. Like prediction markets on like Fully Market currently show around 67% of charts that crypto market structure legislation gets signed into law this year as soon as 2026. So if there are clearer rules arrive, of course, a lot of institutional capital waiting on the sidelines can finally enter the market. And if we zoom out further, because like the macro backdrop also supports Bitcoin right now, like US debt, we know just keep exploding higher and higher. There is no pulling back for sure when it's come to US stock. US debt, but US stock as well. So some forecasts now expect national debt to hit $50 trillion before 2029. Of course, that is a massive number. But the bigger debt gets, the more pressure there is on fiat currencies long term. That, of course, strengthened the very idea of Bitcoin. Maybe not just Bitcoin, but for gold as well. Just something scarce assets like gold, like BTC. And even TradFi, the traditional guys, traditional finance firms are becoming more open to Bitcoin. Fidelity Investment recently argued that the biggest portfolio mistake may actually be owning serial Bitcoin, not owning too much. The research showed that even a very small, maybe 1% Bitcoin allocation improved returns significantly over time. So without dramatically increasing the portfolio risk, looks like that's a good deal. And that's a very different conversation from just a few years ago. Now, let's take a look at the bear case though for Bitcoin. What are the bears saying? Because not everyone believes this rally is healthy. And honestly, there are some real warning signs. We have to pay attention. Like we have to do a balanced review and I'll leave it for you guys to decide. Like, I'll just give you all the evidence and you come up with the conclusion and the outcome. So first of all, We have different findings, different analysis on social media and on-chain analytics firm. So this is from CryptoQuant. So they say that April rally may actually be a speculative bounce, not so much a structurally strong bull market. The argument is quite simple. The rally is driven mainly by perpetual futures, not by spot buying. So here we have this is the current point we are at right now. So like how do you read this is of course like there are different colors. So the purple color represents future demand. And right now the future demand is really building up. And the green color, it represents the spot demand. And spot, of course, it doesn't look like it's catching up as the future demand. So in other words speaking, no real spot demand, no real spot buying. And this distinction is extremely important. Spot buying, think about it, like means people are actually buying and holding that BTC. While future buying, it means traders are using leverage to speculate on price movement. And historically speaking, markets driven mostly by leverage can reverse very fast. I'm not sure if you guys know about 1010 liquidation date back in just last year in 2025. That is a classic example of too much leverage in a single day, and things could reverse very fast. So this is like one of the warning coming from CryptoQuant, and they say like spot demand actually shrank during April, as you can see. And even while Bitcoin rallied really hard, right now we're sitting at 81K. So that suggests the divergence is here, and divergence matter because in strong bull markets, spot demand usually rise together with price. But right now, look at this chart, people. Like this is not happening. And if we compare that to the previous cycle, if we compare that to 2022, this is again coming from CryptoQuant, so credit to them. They compare the current setup to the earlier stage. And again, like they are not saying history must repeat. No one is saying that. But they are saying the structure looks very familiar, and that increases downside risk. Because if we take a look at this, so you could ask like, Jamie, how do you read this graph? It's so confusing. So like, again, how you can read this is like just based on different colors. Green color represent like both spot and future is growing. That is a good sign. Like there's so much momentum. The bulls are in full control. And in the orange color, spot growing, futures contracting. And then the purple one is like spot contracting, futures growing. And take a look at this. Like this is the current, basically that the setup looks very familiar with what we were showing a little bit earlier. So back in the days, like the spot contracting, futures growing, and that's why they draw a comparison. So there's another warning sign, like the from CryptoQuant, the internal bull market index also dropped from 50 to 40. So below 50, generally speaking, it signals weakening market conditions, meaning momentum is becoming less healthy underneath the surface. And honestly, like after looking at all these evidence, all these data, both the bull case and the bear case, I would say like both sides currently have really valid arguments. And that's what makes this market so difficult right now. Because like the bull are right, like institutions adoption is very real. Corporate buying is real. ETF inflow. So if we take a look at the, it's not this one, ETF inflows is rising for the past week is doing really well. So like when it comes to Bitcoin net inflow, starting from like 30th of April even till today, is only green number, which is really good. So inflows are real. Macro debt problem is real, and it has been real because like US is bound to increase the debt. There's no vice versa. It's never going to come back. And long-term Bitcoin adoption is clearly growing. But short-term wise, short-term rallies driven by leverage. If we go back to the chart, like look at the current state right now, again, like look at the purple, like mostly is purple. That means mostly is future demand. If it's driven by leverage, it can unwind very fallingly, just like 1010 liquidation day back in 2025, especially if spot demands is looking so weak. And if traders get overextended, liquidations can push price down very, very quickly. And we have seen that numerous times throughout Bitcoin history. So if you ask me, like there are a few things we have to monitor. First is the spot demand. Take a look at the gray area, if it's going to catch up and slowly get better. Does real buying return? Second is that we have to pay attention to the ETF flow. Like we have to track ETF because usually people buy ETF, they are the big guys, they're institutions. So do institutions keep allocating capital to Bitcoin ETF? And then finally, we have to take a look at leverage. So where's the chart here? So liquidation, because like getting long squeeze and short squeeze, you can reverse the direction very quickly. If leverage overheats too aggressively, volatility increase very dramatically. So this is why we have to do like TA, we have to incorporate all the analysis together. And when we do TA, we always separate into lower time frame and higher time frame because long term and short term, they can tell you completely different stories. Short term wise, okay, maybe we will have a correction. Right now, again, we are at the very interesting point. We drawn this setup months ago. We are, of course, starting with the daily, but like a very interesting and maybe the bull is in control more than I expected because like there's some bullish sign. So I would agree with the bull case, but also we could not just like choose to believe one side while the bear case is also in front of us. There are evidence in front of us to be cautious. So like TA wise, the daily candle closed above the major resistance, the top band of the bear flag. And right now we are sitting even above this rectangle we drew months ago. So this rectangle between $77K and $80,000. So this is a really good sign. This is a bullish setup. Not only this, the daily RSI, we close above that resistance, major resistance that we are building up for months. So again, like I drawn this, so I basically connected the dot from 6th of October till today. And right now we have a daily candle closing above that, both on the price, also on the RSI. So two bullish setup here. Moving forward, like what I want to see is that if we manage to, because like, okay, this is one candle closing above this major resistance, this like rectangle, this region, this purple area that I've drawn. So this is one. What I want to see is that like if this is just like a wick, if this candle going to go back, it's just like maybe a deviation, and then we're going to go back down, then maybe this is a bull trap, a fell breakout. But like if we have like 2 or 3 daily candles consistently closing above this region, then we're going to adjust the prediction, the analysis outcome, the probability yet again. So in other speaking, like Bitcoin is sitting between two very powerful forces. On one side, we have like growing institutional demand, like as I cover, MicroStrategy, of course, being a number one, supply absorption from different companies. On the other side, the speculative leverage and the very fragile market structure presented by the on-chain analysis. This is again from Crypto Quant. So the next major move probably depends on one thing, like whether real spot demand finally comes back to support that rally. Because if it does, the supply shock narrative gets much stronger. But if this remains mostly just leverage driven, then volatility is far from over. All right, so we'll take a short break from here. When we come back, we are getting more into the trading news. I'm sure a lot of you use Hyperliquid and or at least invest into the hype token because we talk about that numerous times on Genuine Crypto on my own YouTube channel. This time I want to talk about trade.xyz because the figure, the data we're looking, it's very interesting. We'll do a deep dive report because looks like the most of that trading volume is not coming from real traders, but maybe they're just farming for some reward, getting their airdrops. So that's interesting. If you guys are intrigued, make sure you stay after the break for that deep dive report.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxum TV and thanks for sticking around with us after the break. We're now doing a deep dive report. Literally, this reviews something very fascinating about trade.xyz. If you guys have never heard of trade.xyz, don't worry, I'll explain. So trade.xyz is a DEX built on Hyperliquid blockchain. It's specializing in providing 24/7 access to perpetual features for a wide variety of assets, including cryptocurrencies, of course, and also they have stocks, they have different indices, and also commodities. Yes, the reason we are talking about this because there are tens of thousands of airdrop farming wallets on the platform, but surprisingly, those wallets barely contribute any real trading volume. That real money is coming from professional trading firms and also bot and experienced crypto traders. So if you guys have never hop onto this platform, this is the interface. It's one of the fastest growing product built on Hyperliquid. So it let users to trade a lot of things. So here, the default is S&P 500 paired with USDC, but you can trade oil, you can trade silver, of course, trade gold, Tesla, one of my favorite stocks. So everything here is on chain, is 24/7, even when traditional markets are closed. And in just few months, monthly volume absolutely exploded and passed $50 billion. So now, a lot of questions we have to ask. Are these even real? This trading volume even real? What about these users? This is the platform full of fake wallets farming for some future reward, some airdrop token. Because in crypto, that happens all the time. People create thousands of wallets just to game the system, trying to gain that reward. So there's this report that I want to dive in with you guys. So what it does is that it analyzed 80,000 wallets over a 21-day period. And here's the shocking part we have found. So around 35,000 wallets were identified as farming wallets. That's nearly half of all active wallets. But those wallets only generate less than 1% of the trading, so total trading volume. So the wallet numbers were inflated, but not the real dollar activity. Because basically the airdrop farmers are repeating the very same tiny trades over and over again, very small amount, very fast, trying to create activity without taking real market risk. The report trades many of these wallets actually back to this guy. So there's this identity on Poly Market. The name is the Minnow, and the strategy was incredibly very mechanical, I would say. So they would just transfer funds and then would make very tiny trades and then move into the next wallet and repeat basically 1,000 times. So the people who are driving the volume here, in other words, speaking on trade.xyz, they are professional firms. They are market makers and trading bots and very experienced crypto traders. And the report identify two names that just keep popping up. They are being Jump Crypto and also Wintermute. These firms were providing most of the liquidity on the platform, and less than 0.5% of the wallet generates 63% of all trading volume. That tells you how concentrated crypto liquidity really is. So a very small number of professional players dominate most of the activity. Another interesting detail is that a huge number of active traders overlap with users from Poly Market. And think about it, it's actually making a lot of sense because both platforms attract the same type of user, being people who like trading real world events, who like following macro trends and speculative market. This shows something very important about where crypto is heading. We are moving beyond just trading crypto tokens. Now, people, they want to trade other stuff, maybe oil, maybe stock, silver, predictions, or macro events, all on crypto rails because crypto is 24/7 and happening globally. At the same time, the industry still struggle with fake activity and incentive farming for sure. Look at the data here, most of that of course is airdrop farmer. So we have the huge bar here again in purple color. So airdrop, of course, it will grow adoption, not so much adoption, but get attention. It will help with the growth. But they also create all these noise. So whenever you see huge wallet numbers in crypto, we do have to ask more questions. We have to ask how much of this is real? What's impressive here is that despite all the farming activity, the platform still had real institutional liquidity underneath. So real firms, again, as I mentioned, like Wintermute, real market makers, real volume. That's very different from pure wash trading. And I'm still a big fan of Hyperliquid. And again, I've talked about the token hype numerous times when it was out. When it actually the whole airdrop from Hyperliquid was really successful, and it managed to generate generational wealth for a lot of people and turn new millionaires just from doing the hype airdrop. But this report also shows something fascinating about crypto market structure. Retail traders are increasingly using the same platform and tools as professionals. So now you have market makers, you have bots, you have prediction market traders, and also retail users, all interacting inside one shared on-chain market. That's a very different system from TradFi. So final take, yes, some number are maybe, I wouldn't say fake, they have inflated user numbers, but the deeper data tells a very interesting story. The real volume appears legitimate, and it shows how quickly crypto markets are evolving into full-scale global trading infrastructure. not just for crypto asset anymore, but like increasingly for real world markets as well. So that's I would say, yeah, I'm still a big fan of Hyperliquid. Let me know, you guys, if you interact with any DEX in the comment section below. But now I want to shift gears a little bit and want to talk about some Bitcoin adoption, because there is a private school in Scotland and they are taking Bitcoin adoption into a different level, into the real world. So this school we're talking about is Lohman. Lohman School has launched a Satoshi scholarship funded directly or entirely through Bitcoin donations. And the goal is quite simple, is to use Bitcoin to help students around the world access education. So the school says the scholarship can cover up to 2 years of tuition and boarding, and the funding came from donations made by members of the global Bitcoin community. And according to the school, this is part of the next phase of its Bitcoin journey. Literally early this year, like Lohman School also became one of the first schools in the world to officially accept Bitcoin for tuition payments, meaning some parents are already paying school fees directly in Bitcoin, and that alone is already very unusual. But now they are taking things even further. So the school confirmed it is building its own Bitcoin treasury, not for speculation, but as a long-term saving strategy. They describe this as part of a focus on sound money, of course, and financial resilience. So the donors, what they would do is that they would send Bitcoin, the school would hold that Bitcoin, and over time, if Bitcoin appreciates, we know it would do in the long term, that treasury can potentially fund more scholarships in the future without needing constant fundraising. Like, this school is really smart, if you ask me. And we know that the school going to have that huge treasury for sure. Like, if the donation is happening in Bitcoin. And to be fair, I would say like the Bitcoin community so far, from what I grasp, personally speaking, they are very supportive of each other. And when we see news like this, it is triggering noise in the crypto and the Bitcoin community, and some of them would do indeed help schools like this. So this is very important because it shows like Bitcoin moving beyond just trading, beyond just ETF, Wall Street, corporate treasuries. We covered that numerous times here on Roxham TV. And right now, it is actually entering everyday institutions like schools. Most headlines around Bitcoin are usually about price, about volatility or speculation, but this is something different. This is something else. This is Bitcoin being used as savings, as funding, and long-term financial infrastructure. A lot of Bitcoin supporters believe education and Bitcoin would naturally connect and come together, because what Bitcoin does is that it encourages long-term thinking, maybe think about self-sovereignty and financial independence. And now we are starting to see institutions experimenting with those ideas directly. But of course, like as we're looking at the chart every single day, Bitcoin is very volatile. If the price crashes heavily, the value of that treasury could also drop significantly. So this strategy depends heavily on long-term conviction, and the school clearly believes Bitcoin's long-term trajectory remains very positive. And for this news, like what makes it even more interesting is that donation didn't come from one government or one corporation. They came from individuals around the world. Like I mentioned, Bitcoin community is really strong, connected through Bitcoin, of course. That's something traditional systems struggle to do efficiently, but Bitcoin managed to tackle that issue. So the bigger trend we're seeing, like we are increasingly seeing Bitcoin move into universities, into schools, non-profits, and local communities, not just as some investment tool. That's how monetary networks slowly grow over time, like first financially, and then culturally, and then now institutionally. So final take, this story is not just about a school trying to get attention, it's about Bitcoin slowly becoming part of their real world systems. And in this case, it's helping students access those education through a global decentralized network of donors. And that's a very different type of adoption than just watching the price chart to go up. Anyway, so that was some really good news for the Bitcoin community, but we are running out of time and we are towards the end of the show. But before you go, make sure to give us a follow on Roxham TV and also on my X. So my X is jamjamcrypto_IO. Make sure to follow Roxham TV as well, because we have regular news, regular updates on an hourly basis, covered by different hosts. About like global news, about AI, about Bitcoin. Point being, there's so much valuable content you probably do not want to miss out. So do give us a follow on X. And if you haven't subscribed on YouTube, I don't know what you're doing, make sure you do so. So subscribe on both channels. So Roxham TV YouTube channel and also Jamjam Crypto YouTube channel. I'm live here Monday through Friday starting 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the shows are also, the recorded versions are also available on both channels. So Jamjam Crypto YouTube channel and Roxham TV channel. Thank you guys for watching. I hope you guys have a tremendous day and I'll see you guys in tomorrow's show.